So grateful to have you again here. I know you're a busy guy, so we'll go ahead and get started. Very grateful to have you here again, providing some insight into how the process works. So I'll just let you take it away, Keith.
Great. Thank you, Matt. I'm always glad to come back and talk to this group about anything you want to talk about related to property assessment. So anytime, you guys, I will be happy to come back. So let's talk a little bit about the appeal process. I think that's what we're interested in today. Everyone should have got their new valuations and just be so happy. But if you're not happy, what do you do? So there's a little bit of an explanation in the packets from which you got from us, but the only thing you need to do is appeal that value or have your clients tell your clients that they can appeal that value. So we're in the informal process now. And what does the informal process mean is that the statute gives the authority to the assessor to adjust values before the Board of Equalization and Review adjourns or convenes. So from now until around mid-April, when the board convenes, we will go through the informal process and the appeals. So to do that, you really just need to go online, follow the process, fill out the appeal information. It gets submitted to the appraiser for the area that's assigned to it. They will review it, and then they will respond to you in writing of their decision. Then if you do not like that decision, you can have the ability to go to the formal process. So the formal appeal is to the Board of Equalization Review. And let's talk about that for a minute. So the Board of Equalization Review are 5 members of the public appointed by the Board of County Commissioners. And those 5 members sit on that board to hear any issues related to property tax. And that's not just value. They hear a lot of other things. They hear situs, they hear taxability, they hear tax districts, they hear personal property appeals. So they deal with a lot of issues related to tax. It's a very good board. It's a very knowledgeable board. It's made up of real estate brokers, appraisers, attorneys. So they all have a good knowledge of what's going on in the marketplace. So that's the formal process. Then once you get that result from your informal, it will tell you that you have 30 days from that date to file your formal appeal in writing to the assessor to have that re-reviewed by the Board of Equalization Review. At that time, the appraisers will get that again. They will review your information for a second time, and then they will communicate with you by phone or by a virtual meeting to talk through that a little further about your formal appeal and let you know a little bit of information about how to prepare for the Board of Equalization Review. If you do get to that point, it is a quasi-judicial hearing in which it does become somewhat formal, and that board does have the authority to make a final decision at the local level, whatever it might be, change, no change, some change. They do have the authority, and they'll have the last say on what that value would be. What's it like before that board? You will come before them and present your case, and what that board is going to look for from you is why you're appealing, why you think the value is not right, what information do you have to submit to them to show it's not right, and they will then take that into consideration. The county has the same process. We will provide them information that we have and why we think the value is correct, and then they weigh out both sides and what they feel is a real market value. But it is a good process, and they will ask some very good questions going through that process. They will issue you then a determination that will come in writing as the determination of the final value from the Board of Equalization and Review. But there's another step. There's more steps beyond that. If you're not happy with that value and you still feel that something's not right, then you do have the ability from that point to appeal to the Property Tax Commission in Raleigh. And your case can be heard there. in Raleigh. That tends to often be a long drawn out process. That commission hears all the property tax appeals across the state of North Carolina, all 100 counties. So sometimes it can take a little time, at least probably a year before your case will be heard. But that would be the next step. So there's plenty of steps through that process to make sure that every citizen has due process and you are heard and you have many people that are hearing you to make sure that, that a good decision is being made. If you go to the Property Tax Commission, you're going to be at the same thing. They're going to issue a ruling and they're going to give that to you in writing, and they're going to say, here's what we have decided and here's the value. Well, you have another step beyond that. If you can take that then to the North Carolina Court of Appeals and you can appeal their decision. So you do get through the process. It can be a lengthy process. For some appeals, I have saw them go on for 2 to 3 years. Once they get to that level, it takes a long time to work through the system to get a final determination. Now, we have very few that go to the Property Tax Commission. What we do have to go to the Property Tax Commission is typically commercial rather than residential. Residential is usually a little more, we have a little more ability to sit down and talk with the owner to work that out to where both parties can come to some kind of agreement on what the real market value should be. Commercial gets a little different sometimes because we have large commercial property owners here who have tax representation from different firms in which they get paid to do that, and they will just take it through the process right on to the Property Tax Commission to see if they can get a reduction. So that's kind of the process that we work through with the appeals. And that's the same process each year, not just in the reappraisal year. You can go through that process for the appeal process every year starting January 1. So if you don't appeal for 2021 and then it comes up to 2022 and you say, well, I should have appealed it last year, but I didn't. So you still have the opportunity in January 1 to appeal it for that year. Whatever value, though, is decided will not be retroactive back to when the reappraisal was done. In any future years, too, so here's a good one to remember. Let's say that we did the reappraisal in 21. Now we get out to 2023, and you want to appeal in 2023. Well, you can appeal in 2023, but you're still appealing the value that was established as the last reappraisal date, which would be January 1 of 2021. So the date doesn't change for the appraisal. Although we're 2 or 3 years out from the reappraisal, the date still stays the same until the next general reappraisal. A lot of people do miss that. And that's the other reason that often you or some of your clients will say, well, you know, we're 3 or 4 years out from a reappraisal and the value is tremendously different. I mean, if the market keeps going like the market's working now, in 2 to 3 years, then the values are going to be tremendously different than they are today. But remember, we don't adjust those values every year. We adjust those values only during the reappraisal year, one time, January 1, 2021 is the reappraisal date. Doesn't matter if you're in 22, 23, or 24, January 1 of 21 is still the appraisal date. So those values will start changing. And as if the appreciation in the market continues like it is, once we get into 22, then you're going to see that probably most of the assessments are well below what the market value is at that time. So that's a little bit on that process. We've tried to streamline that process and make it easier to where you can go online and get your comps. You can submit your appeal, and all that should be streamlined and much easier for all of our citizens. Well, someone in chat asked them when the next reappraisal year would be. Currently, that would be 25. So we currently will be scheduled 4 years out. So from 21, so the next one would be January 1 of 2025. Now things can change in between then. The commissioners can change the resolution to do it quicker, or they can change it to do it further out. It really depends on where we're at in the market at that time and what our sales ratio studies are telling us that the assessments are related to the sales. But at this time, we are scheduled for January of 2025. So that's pretty much the appeal process. And I'd love to hear some of your questions around that. I'd like to be able to answer some of your questions around that. So if you have any, please let me know what those are and let's talk about them. So Matt, is there something else you want me to go over that people had interest in, or?
I'll start with a question. Oh, it looks like Todd has something. Todd, I think you can unmute yourself.
Can you hear me?
Yeah. Hi, Todd.
Great. So I have a couple of clients that have written me. They were concerned. They were surprised that their new appraisal was considerably higher than they were thinking the market value of their property was. Obviously, I encouraged them to file an appeal, but it seems like it's a trend that properties, including my own in the city of Asheville, seemed a little bit higher than I was expecting.
Okay. Well, Todd, I mean, you have the data for sure. So what I would encourage you to do is that look at the data and tell us if we're too high, because you've probably heard me say before that in the mass appraisal process is that you are going to have highs and lows. Statistically, you're going to have highs and lows. The best that we can do. So could yours be a little high, or could theirs be a little high? Sure, absolutely. But still yet, when they appealed, if they ran the comp process going through the appeal, they should have been able to see some of the comparable properties that were probably used to arrive at their value. And then that's when they should have stopped and said, well, maybe those houses are not comparable to mine, or maybe something's different there that we didn't know about. So it could have been a lot of things. And I'll say that for you too, even for your personal residence that you're in. You look at the comps. I mean, you've got them, and if you feel that it's too high, then I would encourage you to appeal it and submit that information to us to let us take a look at that for you.
I did. I've got a recent appraisal, and I sent that in. So
okay, all right. Recent being what date?
November.
Okay, excellent. Yeah. You know, I will tell you that as we were going through this process and we were getting toward the end, October, November, December, on into January, there were still areas of the county in which the value was changing faster than we could actually keep up with. So even from November to January, you need to take in consideration, you know, what sales happened in that period and how it affected you or anyone else, because we took every sale right up until January 1 and pushed them into the statistics to see where we were at. And there were areas that we had to go back and continue to adjust up, because those sales that happened even in December were often higher than what we had just 2 months prior. So, but it's a good process, and I hope you find that to be true, Todd. I will look for some feedback from you to let me know how that goes for you and your clients.
Thanks.
So there's a couple questions I can think in the chat, so let me hit those. Could you summarize that rule that allows the commissioners to change based on market data? Okay, so the commissioners ultimately can set the reappraisal any time, but up to an 8-year period. So we have to do a reappraisal at least once every 8 years. The commissioners have the ability to move that up to whatever year in between that they wish. Now, what drives that is the sales ratio study. Every quarter, we do a sales ratio study and submit that to the state of North Carolina. And what that sales ratio study is looking at is every transaction that you have done and your colleagues have done over a quarter of time, a year. We look at those sales transactions, compare those to the assessments to see where we're at in a ratio. So once that sales ratio in 1 year total goes below 85%, then that triggers an automatic reappraisal. So what I would do is to get, and what I often do with the commissioners and updating them is that if we get close to that, if we're a year out in a reappraisal and I see that we're already, the sales ratio is at 90% and the market's still doing what it's doing today, then there's no reason that the commissioners should make any other decision really other than to move forward with the 2025 reappraisal. Unless something happens in the market in which things start changing, then that could happen too. So we don't know what's in our future over the next 4 years. But I hope that answers your question, that the commissioners do have the ability to, by resolution, to change the reappraisal year to when they think it's appropriate. Let's see. So I think a lot of folks are surprised. This is the question. I think a lot of folks are surprised and concerned that this took place at the heels of a pandemic. Well, here's what you got to remember is that that's not on the commissioners. I will tell you that. And maybe you guys have read that I have said, and I will say again, the commissioners nor the county manager, either one, asked me or told me to do a reappraisal. I took the reappraisal to the commissioners and asked them to set the date for 2021 because I felt like that we needed to do that to fix some of the inequities in the assessments and also stay ahead of that sales ratio before we were told that it had triggered the reappraisal. And it did. You know, the data that came in for 20 showed that we were at about 83%. So it would have triggered a reappraisal anyway, and we would have not had a choice. We would have had to do it by the state law. The law says you have to do it at that point. The pandemic, as you well know in the market, so the pandemic, as far as how it affected people in the employment side of things, had little to do with obviously the market, because as you guys know better than I, it appears that the pandemic helped this market, that the market got even stronger from the pandemic, from people wanting to move here. Now, that's just my opinion, and you guys have your own opinions, I'm sure. But there was nothing in the market data that we had that said that the pandemic did anything to the market other than make it stronger. There was no pullback that we could see. So if you guys have that and you would like to share that with me, then I'd be happy to look at that and be able to comment on it, but I not saw that. So next question. Here's the question. Are you expecting the tax rate to be adjusted down this year since there's such a huge jump in values? So that someone had a 40% increase in value won't see a 40% jump in their bill. When will the rate be announced? Chairman of the County Commissioners, Brandon Newman, has already said publicly that the rate will be changed. Okay, now what that rate's going to be, we don't know at this point. The rate will be set sometime, I would assume in June, because it has to be set by July 1 for budgets, has to be ready by July 1. So they typically then publish what that rate's going to be sometime during the month of June. Now, you bring up a good point, and I've said this over and over, and I encourage you to say it to your clients and even remember yourself, is that just because your value went up 40% does not mean your taxes are going to go up 40%. A lot of people maybe could even see their taxes come down some because of the adjustment in rate. And that has happened in the past. So some could come down, some's going to go up. But what you will hear is that budget office and the county management office will publish what the revenue neutral rate is. And revenue neutral means the rate would need to be at X for the county to still collect the same amount of revenue that we did prior to the reappraisal. So they will publish and they will put it out there about what that rate is. Compare it with the new values. What's it going to take to get the same amount of revenue that we had? And then it would be up to the commissioners to adopt whatever rate they feel is appropriate. So I hope that answered your question. Anyone else?
Hi, good afternoon. Thank you for your time.
Sure.
I know everybody gets, for lack of a better word, they get excited until the trim notice actually comes out. For new construction, I'm trying to advise a client, and I'm not seeing specific verbiage. So the question is, for new construction that's not actually finished as of yet, obviously next year, or I should say, if the building was done by the end of this year, or should I say, by the time the trim notice comes out, it's going to be X. But for some reason, they're getting a very high tax bill as of right now, based upon what the property might be worth. So the question is the bill start next year, or is it just a portion for this year? It was dirt costs last year.
Yeah, so if the construction started during the year of 20, whatever was on the dirt January 1 of 21, we will estimate a percent complete for that construction and assign a value to whatever was there as of that date. So if they have a $500,000 house and they were 20% complete, then we may have assigned, $200,000 to the house or something. But the next year, then come January 1, if the property is complete, then they will get a value of represents 100% of the market value. Now, they can again appeal either one of those. So the value that they got for 21, if it included part of the house and they feel like that is too high for the stage they were at in the construction process, then they can appeal that and help us better understand where they were at in the construction process and maybe what the cost was at that period of time.
Very good. Can I ask, is there any specific verbiage that shows, let's just say that 20% on a website that they can refer to? Or you just use a figure?
It's in the schedule of values, but probably would not be easy for you to dig out, but we do have it here in the office. And what we have is a scale that the appraisers go by that says from 0 to 100%, and it gives you the points of, well, if the roof is on and the insulation's in, it's this percent. If all the exterior siding on, it's this percent. It goes through that breakdown and gives a guide of what the percent should be. So if you can contact me directly, then I can get somebody to send that to you if you'd like to see it.
Super. Thank you very, very much. I'll do so.
Sure. Anyone else? Matt, did you have a question?
My question was actually kind of answered by the first gentleman, so I'm good. Thank you, Keith.
Okay, great. Let me see. I think I have another question in the chat. Does an actual human appraiser review every value? Assume that the comps are pulled into an automated fashion, and then they just double check anything that looks wildly off. So the entire county is broken up into different neighborhoods, and each of these neighborhoods will have different numbers of parcels within them. So we review them typically in groups. So there is human appraisers behind it, but did a human appraiser touch every one? I would say not. Impossible. We have about 10 appraisers here, and we have 127,000 parcels. It would be almost impossible for us to actually touch every one of them. So we do, there is some values that are produced from the models. And the model just means, if you have this type house, this size, this quality, such and such, then it gets pushed into that model. And then that's what the model will produce a value based upon the comparables that we have, which the model was built on. So in the review process, the appraisers will review every value in that neighborhood. They will go through every parcel and look at every value to see if it looks like that it is in line with what they feel the market is for that neighborhood. So you probably don't have the human interaction that you're talking about. We don't have the human interaction that you have with an appraiser doing one for a mortgage that just looks at one parcel and they focus on that one. Time does not give us the ability to do that to that level. But to some extent, we did touch every parcel. Okay. So the other question, are we seeing different appraisal values on properties that were subdivided since the last general reappraisal? And how does that work? Example, I see new values listed for 2 lots for a subdivision that was recorded on 4/20 and didn't see that reflected until recently on the tax website. Okay, so yeah, those plats that are being recorded are being worked now. So you may not see that new value for each individual lot today, but you will see that soon. Now, depending upon when the plat was recorded, will determine if that's a 2021 value or if it's a 2021 or 2022 value. So there's a time-in thing there. And the 2 lots in which were in the subdivision that maybe you saw values for maybe were recorded in 20 and not 21. So anything that was recorded in a plat splitting a lot out after January 1 of 21 will not be appraised until 22. It will be appraised in the tract, in the whole parcel, but will not be separated out.
So I think, sorry, this is the questioner. I'm the one who asked that question.
Okay.
A listing went on the market last year, so about a year ago. And as I've been checking back on the tax website, I believe I saw that, it was, what would you say, new data was pending or something. It's only today that I've noticed that the new value is in there. A lot of what we've been kind of working off in forming the contract and so forth was, the old data, I guess I would say. Even right now, the total value, if I look at the upper right-hand side on the tax website, is different from if you add together, lot 1 plus lot 2, you get a higher amount than what it's listing for the total value, if that makes sense. Anyway, so it's been a little bit confusing to interpret going along.
Okay. Not all developers. Now, I don't know, maybe I could ask you this question, is that this subdivision, that was the entire plat recorded and each lot was to be split out based upon that plat for the year of 21?
So this was recorded on April 23rd of 20.
Okay.
Yeah.
All the lots were recorded in the plat?
Yeah. And it's only 2 lots. Yes.
Oh, it's only 2 lots? Okay.
Yes. Yes.
Then yes, those would, obviously they have been split out, but once the lots split, often the value will be more than what the value was for the whole. Okay.
Yes.
So I don't know, maybe that's what you're seeing, but
yeah, the website actually doesn't seem to quite show when it says the total value in the upper right-hand corner. It's really showing the old value as opposed to the new value. For example, I've got PIN numbers if it helps, but
well, I tell you what, Laura, why don't you send that to me directly, and you and I can talk via email, or we can even talk by phone, and I'll help you get that kind of worked out. How's that?
Sure. What is your email?
Keith.miller at buncombecounty.org.
Thank you.
You're welcome. Okay. Anyone else? Well, Matt, I ask you to always remind these folks that they can reach out to me anytime. Okay. My email is now in the chat for anybody that wants to capture it. You can capture that. You can send me directly emails anytime, and I'll get you answers to your questions and help you any way that I can. Okay.
Keith, we so appreciate you. Thank you for the explanation, and we may have you back again in the near future. Thank you so much for your willingness.
Anytime. Glad to be here. So thanks. I'll see you soon. Bye-bye.
Sounds good. Yes, Krista. So, we've had requests on recording, and Keith was nice enough to allow that. People don't always. And so, yeah, we will post it.